Felix here, and welcome to this pre-market live stream of doom and gloom. No, in reality, I want you to actually understand what's going on here. So I'm going to walk you through 6 things here this morning. Institutions have indeed started to sell. That's not good news. So you need to understand that and why they're selling and where they're selling. That leads us to number 2. What's actually causing this sell-off? Where's this panic coming from? And then 3, what do we do now? 4, some stock ideas. I'll walk you through some ideas you might want to look at. Inflation data just out. Inflation has actually just dipped. Does that mean we get Fed cuts? Yes or no? And then number 6, and most importantly, I want to give you one rule for timing your buys in this mini crash situation that we've got going on here. So do you think those 6 things, if you understood those, that will be helpful? Then write 6 in the chat, just the number 6, and I see that you're alive and awake, and despite all the misery out there, you're still, sort of with us. So let me share my screen with you. And I'm, as you can see, in a hotel room somewhere, probably not so near you. And you can see what I'm talking to here. So here's number 1 and 6. 1, 2, 3, 4, 5, 6. We're going to run through this in that order. And I prepared some research for you to make sure you guys get the most value out of this. Thanks for all the 6s. That's a lot of 6s rolling in there. Brilliant. 6, 6, 6. Okay, that's a bit creepy. This shows you what? GS, CTA. What the heck? GS stands for Goldman Sachs. CTA stands for, I can't remember. It's basically an algo fund. These are computer-driven funds that sell and buy at certain levels based on rules that a human being inputted at some point. They don't tend to beat the market that well. It's not really a great investment strategy, but it's got a lot of money and a couple of $1 trillion, and therefore they matter. And below a certain level, they will sell. And this is how much they'll sell off the S&P, and they will sell somewhere between 35 or so, 35 to $50 billion. Not sure why my pen is purple today. It's one of those days. I didn't want me to use red, perhaps, to be a bit more gentle. That's quite a lot of money, right? So what's the level that they're selling at? Well, according to our dear friends at Goldman and Sachs, and in there, the bankers who really care, below 5887 on the S&P, they're selling. We closed yesterday at 5861. Not good. So they have started to sell, and we'd expect them to keep selling pretty substantial amounts of money over the coming days if we stay at these levels. Now, inflation might be a little bit of an opportunity, and we'll get to that in a moment, but I just wanted you to understand this. Like, so far, it's been retail that's been panicking, which is why the retail stocks are down, the MSTRs, the Palantirs, the SoFis, all those kind of retail plays. Bitcoin pretty hit hard, but institutions just been like, we're good. Pretty happy, we're going to chill. But that changed yesterday, which is why we saw that very, very dramatic sell-off. Now people are still complaining that I slurp, apparently. This is a slurping channel. Feel free to slurp along with me. This shows you how you're feeling, probably. Fearful. Who's feeling fearful? Put fearful in the chat. Like, be honest. It's no shame in feeling a little fearful. We're down here at sort of 23 or something on the 0 to 100 scale of greedy and fearful. This is extreme fear, right? This is like, oh my God, it's terrible. It's the end of the world. And we don't get those very often. We had those, I think, in, was it 2021, 2008, that kind of level. We're not that often in extreme fear. And that could be an opportunity, right? If everyone's fearful. Okay, fearful, yes, quite a lot of you are honest here. The end is near, indeed. Yes, you should have a sign. Just if you're in a town center somewhere, just hold up the sign and go, the end is near, and you're going to be viral on social media soon. This is yesterday. Pretty ugly, right? Nvidia particularly down 8.5%. Google, Meta, Microsoft down all about 2%. Amazon as well. Tesla down another 3%. The only thing that's holding up somewhat decently is finance, energy, but overall pretty evil end to the day yesterday. To just give you a little bit of a perspective, this morning's looking a little bit better. But first, I want you to understand what's actually driving this, because once you understand what's driving the market, you'll be able to see when the pattern changes, and therefore you might be able to make better decisions when things improve, right? Logan is excited and happy. What happens when you're one of my students, Logan? You become a bit weird, right? Don't you? Trump says he's going to put 25% on European cars. Well, he actually said European cars and other things, not defining other things, which isn't tremendously helpful because it creates what? It creates uncertainty. Uncertainty is the one thing that the market truly hates. It makes us feel on the edge, and therefore, we actually forget to smash the like button on a video like this, which would be a real shame. And then he's saying on Chinese stocks, Chinese imports, he's putting 10% tariffs on everything. It doubles up on the previous 10% that we just got. It puts 20% on all Chinese goods. It also removes all the exemptions of the small shipments, the below $800 shipments, the sort of stuff you're buying on Temu and Amazon and that kind of thing that gets shipped from China to the US and therefore evades taxation or tariffs. That's all gone. So that rattles some businesses and some people. But why does it rattle the market as much as it did yesterday? Well, it's got a lot to do with concentration. So at the moment, the top 10 stocks are a huge percentage of the S&P. Enormous percentage. I think it's 30-something percent, 37% or something. The top 10 stocks are 37%. The other 490 stocks are the rest. Huge concentration. The highest concentration we've seen since, 1929. Which again doesn't make people feel particularly warm and fuzzy inside, because if you remember, that was the beginning of the Great Depression. So therefore, it's really all about big tech. Big tech wobbles, the whole market goes, because the rest of the market hasn't moved that much. I don't know if you own other non-tech stocks, you will notice that they haven't actually moved that much. So it elevates, it magnifies what's going on there, because it's all about Nvidia and Microsoft and Co and Apple and so on. So the next question then is therefore, what do we do with this? Well, if you thought it'd be helpful to understand the patterns deeper, and it'd be helpful to understand, well, what do we buy and how do we time that entry, then you're probably human. Because it's helpful for everybody, right? It's what the guys on Wall Street are looking at. So if you want to get those rules and those systems and those 3 key points where we buy and sell, then I'll give them to you. You just leave this video right now, literally go away, watch felixprehn.org/get free instead, because you will actually learn the rules rather than learn today's news. And what's more important, the skill of spotting the patterns of the market or understanding today? Open question. You can answer that in the chat if you like. Now, I also showed you this one yesterday, and that is that we are at the most bearish sentiment in a very long time. The 7th highest bearish sentiment of all time. It almost feels like the market's crashed like 30%, right? It's down like 5% or something. It's really not that big a move, or 8% or something like that. So why is that? Kind of an overreaction. I think it's just this generation, in a sense, of investors who've had it very, very good. We're always like, oh, we're going to get bailed out. It'll all be fine. And I think it will all be fine, by the way. But, we're at kind of like 2008 global financial crisis levels, which is clearly not what's going on out there. The US economy is in pretty good shape. Yeah, there are problems here and there and the other. Inflation is pretty decent, right? Near full unemployment. Unemployment figures have spiked a little bit. Where? In Washington, D.C., right? When did you start worrying about the bureaucrats getting fired? Really, let's face it. More slurping. More slurping. So that says to me, this is pretty bad, and it might continue for a while, but it's unlikely to get that much worse. That's what that's saying to me, because we can only get so bearish. Plus, there's this little chart here out of Bloomberg. What does this show? This shows you money market funds. There are $7 trillion in money market funds. $7 trillion sitting on the sidelines, who've decided that the stock market is too risky and they'd rather be in money market funds. Now, this is an if, not a guarantee, if Elon manages to cut US government spending single-handedly, the money market fund interest rates will come down. They already have, but they're going to come down some more, which means it'll be not that attractive to keep the $7 trillion in money market funds. And therefore, this 7 trillion will gradually, but slowly, and it takes some time, move over into the stock market. So the medium, longer term, this is a lot of money to pour into the stock market. It's about as much money as retail investors. Retail investors are about 7 trillion. So this is as much money as all of us retail investors have in the stock market. Pretty tremendous. What does it all come down to? Volatility. You understand volatility, and I talk about this sometimes. I know it's a bit of a strange concept, but I want to dip you through this very, very important concept every once in a while so that you start to become familiar with it, because it'll allow you to make better decisions. The volatility index, also known as the VIX, has been spiking like mad. We're over 20 right now as we're live here, which is generally a fairly elevated level. And there was one more chart I wanted to show you. Okay, let's get back to that in a second. We'll hold that thought. I just wanted to, let me show you a couple of, I think, potentially interesting stocks that one might want to start nibbling at. Obviously, it's your call, and you got to decide your risk management and so on. But Meta is trading at 2015 valuations. It's still above its 50-day moving average line, so it's not a sell signal. It's bounced off that line here. It's looking pretty decent even in this environment, and therefore it's maybe one that is more stable and reliable than some other stuff in there. And yes, compared to 2015 valuations, which is literally where they're trading right now, they're bringing in $100 billion more now than they were in 2015. Still at the same valuation. Kind of crazy, right? So that might be an interesting one. And I thought I'd print out a couple more, looked up some numbers. What are these numbers? You might want to take a note of this or take a screenshot of this. These are share price. What's going on with my my mouse here, Microsoft? This is share price divided by free cash flow. How much cash have they got left over at the end of the day or the end of the year, and then multiply that. So the lowest one here is Meta, 27, which is a pretty reasonably low valuation. Google is also there. I'm a little concerned with Google, I must say, because I haven't Googled anything in a while. I use Grok, way better if you ask me. Amazon just put something out with Alexa, which is also going to make people use Google less, because they'll then use Anthropic to search. Apple is likely to put out something similar on iPhone, so there's a slight concern here that ad revenue on Meta's side might not grow as much as in the past, right? If you look at the valuation multiples here, Meta looks like an interesting play. Looks like an interesting play for me. Now, how do you decide when to get into one of those? Well, learn the rules. Like literally, like yes. I think most people, I had a chat with somebody on about that today at lunchtime. Most of us need an incentive to actually go and learn and change how we behave. And for most of that incentive is pain. Like we are very pain driven as human beings, right? Most of the greatest things that have been accomplished by people came out of pain and suffering. So if you're suffering a bit because your portfolio is giving you some pain signals, then the one thing you can do is use that pain to motivate yourself to actually sit down and watch my masterclass and dig a little deeper into how does the market actually work? How can I be in a better position to profit from this dip, which will inevitably be recovered, like all dips in the history of the stock market? And one way you can start that is go to felixprehn.com/get free. So those of you who are going to go and watch the masterclass, write free in the chat so I can see that you are actually going to go and do that. And then let's look at some inflation, and let me look at some of our favorite stocks, and I'll take some of your questions as well as usual. So we got in inflation data just, and it looks pretty decent. So we were expecting core PCE, which is the Fed's favorite inflation metric. Imagine being so boring, you have a favorite inflation metric. It's core PCE. It was expected at 0.3%. It came in at 0.3%. So that's in line, right? Personal income. Now that jumped a little bit more than we thought it would, which is not really wonderful. You could say it's the strength of the economy. It's an indicator that the labor market is still tight. But it's also sort of saying to the Fed, guys, don't cut interest. So it's kind of like not brilliant. Personal spending is declining by 0.2%. We're expecting it to be slightly positive. What does that mean? Well, it's probably a bunch of Democrats who are concerned about this economy, who are worried about this economy. The savings rate is going back up. And you might think that's a good thing, but it's generally a sign of a slowing economy when people start to get worried. And it's the US at the moment is split in the middle. You've got half the country who think everything is going to be amazing, and the other half of the country think it's all over. And it's pretty polarized, and over time that gap will get closed. But yeah, people are spending less, which is a little unusual. But overall, pretty decent data. It could have been a lot worse. We're not getting any spikes in inflation here, which is kind of the key thing. So therefore, I think overall this is relatively good news. Okay, I see the freeze there from Joe and LC and Lynn and Galaxy and Manic and Matt to watch twice. Brilliant. Never too late already in the program. Jason Free, fantastic. Analog already did. Fantastic, guys. Logan says we don't like people having income and jobs. That's basically the life of a stock investor. You want everyone else to be unemployed. Not everybody, just enough people. Fred wants to free to bet. How about start with something smaller, like freeing yourself first? Probably something you could actually accomplish in a couple of months, whereas countries is a little bit more challenging. So all right, let me show you this one here then. And I think this is probably the chart of the year. Like if you printed this one out and gave it to your children, they would make money forever after. What have I got on here? I've got two squiggly lines. The first squiggly line in red and green is what? Anybody can see that? Can anybody see what the red and green line is there? Put it in the chat. That one there. That is the S&P 500. And then in unashamed purple, we have what I alluded to earlier, the VIX fear indicator. And if you don't know what the VIX is, you don't know what fear indicator is, give me a minute and I shall explain. And the red line is more or less 20 on the VIX. When the VIX is above 20, people are scared. Market's dipping. Historically, has that been a buying opportunity? Well, the last time we had a significant spike was where? It was in August when Japan sort of briefly imploded. Would it have been a good idea to buy the S&P at 5,200? Yes or no? The next time we were below it was here. Would it have been a good idea to buy the S&P at 5,400? You see where I'm going with it, right? So essentially, and I only looked at the last year, you could obviously go back in history forever after. And generally speaking, when the VIX is above 20, it's a time of fear. Can be, it can last days, in theory, even weeks. It's pretty unlikely to last any longer. It's usually a question of a couple of days, just because of the way the VIX is constructed, which we don't need to get into. So what's it up? It's an opportunity simply to buy the freaking index. If you wanted to go deeper, you could also somehow short the VIX. And again, I'm not recommending that because you need to understand how that works, but there's certain option strategies we can run. I'm running one of those already. I'm probably gonna double down on that this morning, and that can make us really, really tremendous returns, like 50% or something like that, with near zero risk, by the way. And it could be done in all portfolio sizes. So, Monson, you've seen Get Free 4 times. You see, he's talking about the masterclass. When people go and watch a 15-minute masterclass 4 times, I think it says that there's some value in that. Don't you think? So if you haven't seen it yet, and there are 3,164 of you on here, I imagine about 3,000 of you haven't yet, you might just want to go check it out. There might just be something in it that can help you make this a more peaceful week, end of the week, a better weekend, more importantly, a really glorious year, and then make your investment better for the rest of your life. The skills I'll give you, they'll stay with you forever, and they're free. So check it out. felixprehn.com/get-free. And all the questions like, what do I do with Palantir or Soify? Do I hold or sell? All of those questions will be answered because the same rules apply to absolutely everything. Can you explain the VIX trade? Basically, when you are above 20, sell it. When you're below 13, 14, 15, you buy it. Very, very simple. It's a thing that's range bound. It's the only thing in the stock market that cannot go up in the long run. It's impossible. It's an instrument that always goes back down. So when it's elevated, you sell it. And when it's very low, you buy it. Why? Because something will always spike it. There is always some fear coming up at some point. And with Trump in the White House, it seems to happen every other day. And that's actually a really glorious thing. It makes us a lot of money. So I just sold it 2 or 3 days ago. I shorted it 2 or 3 days ago. We might double down on that a bit more today if it keeps going up. And then it's going to come down, and then we're going to close that trade, and we're going to take profits up and down and up and down. And normally, in a normal year, we get that opportunity like 3-4 times. I feel like with Trump in the White House, we might get that opportunity a couple of times a month. So there is a whole segment of Wall Street that calls themselves volatility traders. And I employ about 6 of them. We've done this for decades. My mentors that I give you guys access to if you're inside our program. And that's how they make their money. So they just trade volatility up and down. And almost nobody in the world understands this. Like the 0.0001% understand this. But it's actually incredibly simple and it's incredibly powerful. So I'll keep going back to this every once in a while. And it'll help you. It'll sink in over time. That's kind of the goal here. Vince says, trading the VIX is insane work. You mean insanely easy work? Alpha, my friend, you've also watched the masterclass 4 times. Brilliant. Love you for that. VIX is currently at 21 or something like that, right? Which is a really happy place for us to have it. Let me pull up the S&P here. That's the S&P right now. Now, S&P doesn't trade pre-market. So let me have a look at, well, let's have a look at, computer is getting a bit hot. We're going to have a look at SPY, which does trade pre-market. Indices don't. How far do you usually buy VIX options? I normally go at 2 or 3 months. They're a lot less volatile. But yeah, you want to obviously take profits at a certain level. That's important. You also need to really understand like whether you should be a buyer or a seller of options and that kind of thing. Like it's a little bit more to it. So we got the data in here at 8:30. We recovered a little bit there, and then we come back down. So there's no real love lost out in the market there for what's going on right now. Everyone's going, they're still bearish. We're still scared, and that's a good place to be sometimes. You know what's going on out there. S&P does trade pre-market. The SPX doesn't, my friend. The index doesn't trade pre-market. The futures do, and the SPY does, which is an ETF. But the index itself, SPX or NDX, doesn't trade pre-market, which is what the futures market is really made for. We're trading at 21 right now on the VIX here, and you can see how relatively rarely that happens and how short-lived those spikes are. So we like to sell those spikes, but please don't do it unless you have a mentor who actually walks you through it, because there's a lot more to that. Brent is asking, what do you trade when you're trading the VIX? You can trade the VIX directly in some brokers. There are some other instruments like VXX and stuff. They all work a little bit differently, so there is a bit of a learning curve to that. Don't just trade whatever it says that says VIX on the top. Isn't really necessarily VIX inside. If you're using brokers like Thinkorswim, you can trade VIX directly. Jason, using ETFs, yeah, I'm not really a fan on the way up, because you're referring to. On the way down, like you could just sell VXX or something like that. Yeah, just the case. That's not a bad thing. But on the way up, you kind of don't want to do that. Okay, let's have a look at some of the stocks then that are in pain. Tesla, for example. And the psychology of the market is a really interesting thing, isn't it? People were super excited about Tesla with Trump and Elon being near power and so on, and you know, drops a little bit and everyone's like, oh my God, it's all over. Like he should quit and that sort of thing. If you look back at the chart, 2022 was way worse. Look at how much lower we went there, right? We went way lower. And the kind of sell-off we have here is a sell-off that we saw in late 2023. Like, this is really not that unusual for Tesla. So people are being rather emotional on this. And I get it, you know, triggers emotions when your stock goes down. Some of you guys are talking about ACHR as well, Archer. And these are all retail stocks, right? So this is down 13% right now pre-market. Why? Because earnings disappointed. Earnings disappointed quite significantly, apparently 61% below expectation. So massive, massive, massive drop down there. And well, this is what stop losses are for. That was an exit point. 150 is still down there. Now, it will recover. I think they have a bright future ahead of themselves, but we're basically back to where we had the last breakout here, right? So again, which sense a lot of fear in the market that generally leads to overreaction. Nvidia got absolutely killed yesterday, which is what drove the market down. Bernie, if all customers hate you, Bernie, there is a thing I've learned, that the people who are complaining are much louder than the happy people, right? The happy people generally don't write evil things. They don't go and protest or riot or slash cars. Happy people are just leaving themselves to themselves. And media, therefore, especially social media, will magnify the negative news because they're louder, right? And they're writing and they're complaining. So all this stuff about, you know, sales being down 45% and all that, it's all nonsense. If you look at the actual numbers, it's like a very, very small number of cars sold in January. There's the model changes and the comparison points and all of that. And there was a the previous year's January was very, very good because certain tax credits were ending. So there was a big bump there in sales in that month. So it's a lot of noise. That's really what it is. So sometimes I think you need to look beyond the noise if you have a longer term view, or you also don't have to. You could obviously just trade whatever the noise is. But Nvidia is now trading at 117.95. It looks like another gap down here this morning below the 150. So definitely pretty ugly. And fear sells. Yes, absolutely. So, you know, the media likes it. Why does the market hate Nvidia? The market is an emotional beast, really what it's all about. And there's also a little bit of noise around some of Nvidia's sales to Singapore, right? There's some people who got arrested there and so on. And that's definitely a bit of a story that might impact Nvidia's sales somewhat. But I don't think it's a big enough story to really knock the stock down this much. But, you know, there we go. So much for the Trump bounce. Well, in a sense, I wonder if there is madness to this, system to the madness, in the sense that if you get a lot of this bad news out, and the way they're putting it out, like the sort of daily, you know, shock factor, they know that's going to impact the market negatively. It slows down consumer spending, brings the market down, brings inflation down. It might actually force the Fed to start cutting rates. It could also generate a demand for some of that savings money from the US government, allegedly, to be handed out as stimulus. So are we going to see that? Maybe at some point. I think it'd have to get a lot worse than we are right now, because we're not that far off the top. If you really look at this, I mean, even Nvidia, okay, it was at 152, we're at 117. Yeah, it's not that huge, you know, that big a deal, or SPY. You know, we're not that far off the top, really. And SPY still pre-market here. So yeah, a little bit up today, but you know, we were trading at the high as 612 at 585. It's not that big. Mark's talking about market makers. Yeah, they have to buy. They do, and they hedge, but it doesn't mean if enough people sell, at some point the market makers stop buying, right? You exhaust them, and then it goes down further. Does Amazon benefit from tariffs? Yeah, I've thought about that. I don't think it affects them that much, because most of this stuff is sold on Amazon by non-Amazon people. And those FBA businesses and so on will just start buying the goods where they're cheaper, in the US or Mexico or wherever they might come from, countries with lower tariffs. So I think it'll just shift. It would take a very, very significant overall tariff level to then reduce consumption in the US, right? If people started to buy less stuff I don't really see that hugely happening. And I also don't think that's the main growth driver for Amazon. I think it's more, stuff like cloud computing and pharma and medicine and robotics and, stuff like that. I think that's really more where the growth is for them there. Okay, let me just look at some of your questions here, guys. And yeah, there is also this sort of weird psychology, right? Everyone loves the S&P at 600 or, Nvidia at 180 and at 110, nobody wants it. It's kind of like weird, right? Like our psychology is really something that trips us up again and again and again. Like we want to buy a stock that's more expensive. And, say Palantir trading at 90, everyone's like, oh, I wish it would go to 60. We have to really like replace that fear-based and FOMO-based system that we all have been installed with, like all of us. It makes us human. You have to replace that with a rule-based system where you spot the patterns, where you spot the opportunities, and then take advantage of them in a kind of systematic manner. And that's really the only way that you're going to generate real wealth again and again and again and again, because otherwise you're just kind of at the mercy of Wall Street and media, and who are just going to take your money, because that's really the way that system is set up. It's not there to work for you. You want me to do a currency, even? I'm not a foreign exchange trader, my friend. It's not really where I live. The only way I look at that is like, does it affect the stock market? And yeah, again, a stronger dollar hurts whom? The big tech stocks, because they sell a lot of their stuff in non-dollar countries. So therefore, their earnings are worth less when they're converted back to the US dollar. So let's have a quick look at some of our favorite tech stocks here. Feel free to shout them out in the chat. And for all of you who are like, oh, please look at this chart, please look at that chart, all the stuff that I look at, all the indicators that I look at, you can get access to these like zero risk, literally, if you just go, I've gone off the screen now, haven't I? If you go to tradevision.io, links down below as well in the description, and that actually gives you access to all of our indicators, all of our breakout indicators, and the very charts that I look at here. So Palantir gapping down again, now very significantly below the 50-day moving average line. So retail fear is real. People are selling. People are getting spooked. Opportunity depends on your time horizon, I would say. Yeah, we're going to see a lot more pain here, I think, today. SoFi 1.5% down at the beginning of the day here, below $14 again. If you zoom out, well, it's where we were in January. It's where we were in November. I don't think it's a particular reason to panic, but yeah, it doesn't feel great. On something like PayPal, I'm sure down to a little bit, 0.2% down, not massively, but a little bit. Every day it's selling off a little on falling volume, so there might be a bottom in here somewhere, but I've yet to see it. Logan says, stick to your plans. Rules, everyone. You'll be okay. Precisely. How is it possible the current price is under the support line? Well, more people are selling than people are buying. You can have support, but you can break through support levels. To break support levels, you often bounce off them, but not all the time if you sell enough. My audio is dropping in and out. Okay, sorry about that. I think it might have something to do with the laptop, just because I think we overwhelmed the laptop a little bit. The same thing seems to have happened yesterday. So yes, let's have a look at the heat map. That was pre-market. This is now live. So big tech is selling off. Financial stocks are actually looking pretty good. Health, consumer is looking pretty decent, but financial stocks are still bleeding. Okay, some of you guys are having some audio issues there. It seems fine on my end, but I think we had a similar thing yesterday. I'll be back without a laptop on Monday live. So the support line is calculated by data in the past. No, it's based on where the options market is positioned. So it tells us where the market makers have to buy. But the market makers have a certain position size. They're not going to buy forever, so they're going to exhaust that position, and then people are still selling. then you can obviously drop below it. So it's not like it's like a wall that you're defending, but if enough people attack the wall, eventually the wall will crumble. That's basically how that works. And yes, it might be a bit of the internet connection here as well. So I think that's probably a good time to call it quits here for the day. I wish you a beautiful rest of your week and weekend. Don't panic. Use this as a motivation to learn, right? You're feeling queasy, you're feeling uneasy. Go to felixprehn.org/get-free. Let me give you some rules, some systems, some processes that help you understand how the market really works so you can make better decisions at felixprehn.org/get-free. And I wish you a lovely weekend. All the best, guys.